Hey there, welcome back to FreightWaves Now on this Wednesday morning. I'm Andrew Cox alongside lead economist Anthony Smith. We've had a bevy of economic releases this week that we can chat through. So what do you have for us?
That's right. So starting it off with job openings, this is one that I've kind of been talking to and looking forward to for quite some time now. And so what we got was, of course, yesterday we just talked about, so diving a little bit more into it, a downward movement for total non-farm job openings. So this downward movement in the job openings also coincides with the record number of quit rates that's happening right now in the economy. So we've seen more and more people quitting their positions. We're seeing the job openings come down a bit. I mean, coming down a bit is nice because it was at record levels. I mean, looking at it peaking up just over 11 million, and I think it's really unheard of and really unprecedented that we've never really seen these numbers before. So this downward movement isn't too much of a shock. It had to stop at some point in time. This is right around when we expected it to come down and kind of moderate a bit. But even though it's coming down doesn't mean that there's some type of shortage of jobs or that this is kind of reversing. There's still tons of jobs. And I think this is going to mimic, in a sense, what we're going to expect into 2022 is that there's still going to be an immense amount of growth within the overall economy. It's just not going to be in that hyperdrive speed right now. And so diving down into this a little bit more in our next chart, we're going to look into different segments here. And so we're going to have manufacturing in the blue line, and in the orange line, we have transportation and warehousing. And these are both hitting pretty high levels. I mean, pretty high, I say that lightly. Looking at this blue line here, manufacturing edged down just a hair, still very much active. There's still a lot of activity going on here. And even after activity starts to really slow down, even in the slightest, there's still going to be a lot of flatbed activity coming from this manufacturing segment just because there's so much backlog, there's so much production still to happen. Looking at this orange line here, looking at transportation warehousing. Now this doesn't just look at truck drivers per se, this is complete office workers, all transportation all together. Don't want it to be overshadowed by this blue line here because there's still tons of stuff happening, as you know, of course, here in transportation and warehousing, lots of openings still. And in fact, this one actually edged up even more.
Yeah, I think we were talking to John Kingston on last Friday about the jobs report that came out, and he said, that we didn't see the type of growth we would like to see in the trucking and long-haul trucking sector, but we saw 15,000 jobs added to the warehousing sector. So I mean, we're combining the two here, but in general, the logistics industry has been gaining jobs, since the bottom there in the middle of the pandemic. We're still not back to where we were pre-pandemic, but it's good to see continued growth.
For sure, for sure. And so one of the big things we're kind of looking at, putting it all together, we saw inflation numbers get updated as well. We got to dive into those numbers, get into some of that analysis for sure. They can increase 0.4%. When we're looking at those consumer price index really starting to increase, those inflationary pressures building, we're looking at those job openings coming down, you're looking at those quit rates going up. You of course want to see, the thing that's going to be really hinged upon is those payroll numbers. And so thankfully we saw those payroll numbers increasing, so showing that there are people going back to work, because in our next chart, what we don't want to see is people quitting their jobs, not going back to work, and then still seeing consumer credit really starting to ramp up back to where we were pre-pandemic. And so that's exactly what we're seeing right now. Consumer credit being utilized on a year-over-year basis. Now this is total, and looking at non-revolving and revolving. And there is one big thing that's really pushing this back up, and that's going to be non-revolving credit. So when we're looking at mortgages, when we're looking at auto loans, student loans, this is going to be factored into that non-revolving. In our next chart here, we're going to look at non-revolving, and so, total revolving, and this is going to look at things like credit cards and things like that. So that still is well below pre-pandemic levels, and that's a little bit of good news there, because that's telling us that there is still some wiggle room here for consumers. And as we talked about before, we're really going to get a test for the consumer stamina these last few months here in the year. Are they going to have enough credit? Are they going to have enough savings? Are they going to have enough stability to really push this into what we expect to be the peakiest of all peak seasons, as you coined?
Yeah, so we've got child tax credit still going to the end of the year. We've still, we haven't had a stimulus check since March, but there's still some of that money floating around. I think this is apparent here that I listened to Amit Mehrotra speak about the net debt to net assets for consumers. It's at its lowest point in I think 3 or 4 decades right now. And the last chart was a little bit surprising to me. I'm not surprising, but how fast that revolving debt has surged, or non-revolving debt has surged. It's a little bit makes me a little bit weary, but then when I see this and I see how much room we still have to go before we catch back to pre-pandemic levels on the credit card side of things, it makes me a little bit more confident headed in.
For sure.
All right. Thanks, Anthony. We'll check back in with you here in a moment.